Thank you. I appreciate you have taken out time on your weekend. I appreciate you have, it's early morning in the US, Canada, late afternoon in Europe and UK and in Middle East countries and African countries. Thank you everyone on a weekend time and a family time. You have taken out your valuable time for, and in next 60 to 70 minutes time, we would be sharing those details which Archana mentioned, and in case you feel you can always put your questions on the chat in the later half of the webinar. Thank you once again. I'll start my screen. I'll start sharing my screen, and then we will take this forward. Thank you once again. So let me start this by sharing few slides about the organization which we represent here in this webinar. We represent a company called Max Life Insurance, and this organization is a joint venture between two organizations. One is Max Financial Services and another is Mitsui Sumitomo Company. Max Financial Services is a listed company in Bombay Stock Exchange and National Stock Exchange of India, and it's the largest non-bank private life insurance company in India. On the other hand, the other partner of this organization is Mitsui Sumitomo Insurance, which is a part of MSNAD Insurance Group, headquarters in Tokyo, Japan. It has a presence in 39 markets, over 120 years of experience in general insurance, and the world's leading general insurance of the globe. So together, these two organizations come together to make an organization called Max Life Insurance. And the vision of Max Life Insurance is to be the most admired life insurance company by securing the financial futures of our customers. And when we say most admired, we mean to say that we will do all our work towards such a vision that whenever a customer believes that and he or she feels that I want to buy a life insurance policy, the first name which should come to his or her mind is Max Life Insurance. All our work, all our acts, everything which what we do is towards achieving this vision in the company. Let me go to some of the briefs, about numbers from of this organization. This is the 20th year of operations. This organization is headquartered in Gurgaon near New Delhi. It has got 300 plus offices, which now, however, does not make any sense whether we have, presence in the office or otherwise not. We have digital presence everywhere in the globe. For our non-resident clients, having offices or not does not having offices will not matter. What matters is, are we digitally present? We are completely digitally. All our processes are digital. 14,000 employees and 60,000 advisors we have in the organization, which clearly say that how many people work with us. 68,471 crores of money is the asset under management which we manage on behalf of our 40 odd customers. We are among the top 24th rank in India's great place to work, and this is number one life insurance company in among great place to work. Now, why it's important for customers? It is because a happy employee will always look at better customer service, and that's what we are looking at, and that's what we are actually getting it. From a claim settlement ratio perspective, which is the most important parameter from a customer side, from a life insurance company, we are number one in India, which is at 99.22%. Then we manage, as I mentioned, 68,471 crores of trust of our customers, and this makes us the top 10 best fund managers in India. We have a paid up capital of 1918 crores, and the insurance coverage which we have given to our 40 lakh customers is around 9 lakh crores. This is a brief about the credentials in numbers about the organization. And this is a chart which is in front of you, is how our asset under management has grown over last 10 years or so, 10 12 years or so, and you can look at how this has grown over so many years. That's a trust which we manage on our behalf of the customers, and that's a trust which our customers have on this organization. uh, Let me go to the last slide about the company. There are two ways Max Life or any life insurance company gives money to the customers, to the clients. One is at the time of living, and one is the time of an unfortunate event of death. So we pay one maturity claim every 8th minute. Now this is already 7-8 minutes time, and on average we would have paid one maturity claim by this time. So that's the strength of the company. uh, an unfortunate event which we cover is a death of the client. Therefore, we pay one death claim in every 30 minutes, and our claim settlement performance ratio has been increasing year on year. And last financial year, which is April to March 2020, we were at 99.22%, which is the highest in India. Now, we also have a very, very important thing for our clients and their nominees, which is Insta Claim. On the left hand side of your screen, you will find at the bottom Insta Claim. Insta Claim is a claim settlement within one single day. If the life insurance policy has covered 3 years and the payment is up to 1 crore rupees, if we receive all the documents, let's say by 3 o'clock to our organization, then we pay the claim on the same working day. And in case of any reason we have delayed this claim, maybe a bank holiday or maybe forever, for whatever reason, uh, we are not able to pay that claim, we will pay a daily interest on that. That's a commitment which we give to our clients, and that's the purpose and the vision which I mentioned in the beginning of this webinar. And that's the vision which we are enrolling to. And one of the parameter is this. So that's about the credentials of the company which we represent. Now let me go to another section of this webinar. Why do NRI invest money in India? I don't have to answer this. All of you know about it. How many, how much money from abroad comes to India from individuals. So not only last financial year or this financial year or earlier financial year, for last 30 years in a row, India has been number one in receiving remittances from abroad from individuals. In 2018, according to world billion US dollars as remittances from from individuals abroad. In 2019, the report just came in. 83 billion dollars came in as remittances from abroad, from all other countries, from individuals. So that clearly showcases that people from abroad are sending money. There are multiple reasons for sending money: for their families back home, for the people, for their parents who are there in India, maybe for investment purposes. So there are multiple reasons why people send money, but they are already sent already sent part of this volume to India. Now, do NRI invest money in India? That's a question I'm sure you would have. Share why they are in India's growth story. Now, India has been growing in last financial year and over so many years back. India was growing at the fastest growing rate in the world. I understand in this current situation, almost all the economies are suffering a lot. Almost all economies are degrowing, and this is, nobody can do anything about it in current situation. However, IMF projects that India will be one of the fastest growing economies from FY21 and onwards, which clearly showcases that the potential is very high. And this is the reason a lot of large value organizations, large corporations are investing money in India. In last 1.5 years, and including this year as well, during the pandemic time, a lot of large value corporations and companies have invested money in India. The top 10 companies from market cap perspective from the US has invested money in India, be it Amazon, be it be it Walmart, maybe you can look at Google, Facebook, or for that matter, Saudi Aramco, and many, many other organizations have invested money in India. Many sovereign, funds from governments have also invested money in last 1.5 years, which clearly showcases that the potential is really very high. And there are a lot of companies which has started their manufacturing in India, like Apple and companies like that. So it clearly showcases the potential is very, very high. Um, Now, this was about corporations and companies. What about individuals? Do they invest money? Well, let me share with you with little details about how and why people invest money. There are four asset classes usually in real estate classes. One is equity, one is which product like those. Few of fine art, which is where people invest. Equity is very different
Excuse me,
market
Dinesh.
because it is gives you high. Yes,
Dinesh, it's
yes.
breaking in between.
Archana, you're able
It's
to.
breaking. Yeah, it's breaking in between. So you have to again
Okay,
explain this slide.
okay. Is it good now?
Yeah, better.
Okay, great. Thank you, Archana. So I was mentioning that there are four different asset classes where individuals invest money in. Now, individuals invest in four different asset classes. There are fifth and sixth, but very few of them invest in those. The four asset classes where people invest is equity, and another is metals, which is gold and silver, or metals like those. Third is real estate, property, and fourth is guaranteed products like your bonds, deposits, bank deposits, and product like those. Now, they are fifth and sixth also. People do invest in that, but very few of them people invest in, like fine arts, paintings. You know, if you're investing for investment purposes in fine arts, very few people do it. Diamonds, some people do invest in diamond, for their spouses, for their daughters, and reason for those. But usually people invest in these four asset classes. Now, every asset class is different. Every asset class has its own, risk, and its own returns. Equity gives high return with high risk. There is a risk of fall, there's a risk, and there is a very high rate of return also, and it gives liquidity. Gold and silver is very, very good investment because it is a good hedge against inflation and falling prices, falling economies like in current situation. Gold and silver has risen to the highest extent possible. But it is also subject to market condition because gold and silver prices can come down, and it has come down. In silver in 2009, silver went up to big high, and it came down drastically below half of this value. Liquidity is very good in gold and silver. Real estate is another very, very good investment because it gives rental income, and it also gives appreciation of value over time. Depends on where you invest. Property means it maybe a land, maybe apartment, or maybe a house. It depends on different kind of products which you invest in, or REITs, mutual fund also available for investing in real estate. Uh, However, real estate comes with maintenance cost and ownership cost. Property taxes in some countries are very, very high, and especially in the Western countries, they are very high. That comes into that. It does not have much liquidity in case of an urgent need. That's a negative thing about real estate. Now, the fourth asset class is guaranteed products like bank deposits, and municipal bonds or product like those. Uh, they gives guaranteed returns, and they give security, safety of the capital, but the returns are lower than all other three asset classes. Now, the question is, where do we invest? Do we invest in equity, gold, silver, all money in real estate, all money in guaranteed products? A, a prudent investor should invest money in all four asset classes. All four asset classes are important. Maybe people believe that equity is the best investment option. Absolutely no doubt about it, because it gives you high return, but it comes with high risk. Do you think that some part of the money should be going into guaranteed products? As I mentioned, proper and appropriate asset allocation is very important. If your age is higher, more money should go into guaranteed products. If your age is lower, more money can go into equity, and asset allocation like that. Now, let me come to the point of why NRIs and non-resident Indians are investing money in India. Now, first asset class which I mentioned about equity, and this is the equity. Uh, Archana, sorry, is it breaking now also?
No, no, it's okay.
Okay, okay, okay. Thank you. Sure. Thank you, Archana. Okay, so let me talk about equity. We have done an analysis of how equity market has performed over years in India and compared to all other big markets of the world. Now, you can say, why are we comparing markets? Because the data is readily available, and uh, that's a true representation of how the economy and how the market has performed. Mutual funds can beat the benchmarks, and all those investment portfolios, PMSs are there which beats the benchmarks. They are different, but if you compare equity versus equity of different markets, you will find Bombay Stock Exchange, which is of Indian Stock Exchange. We have compared with UK, FTSE 100, London Stock Exchange, which we say, New York Stock Exchange of US, Dow Jones of US, S&P 100 of US, Nikkei of Japan, Hang Seng of Hong Kong, Straits Times of Singapore, and there are many other big markets of the globe. Because of lack of space, we were not able to came up with Toronto Stock Exchange and Abu Dhabi Stock Exchange and many other stock exchanges. We do have the data available, and data is readily available in the internet. So we have made 15 years and 20 years data. You may say, why we have not compared 3 years, 5 years, maybe 1 year data. That's how a lot of companies compare with. That 1 year, 2 year, 3 year is a very short period to really understand how the market has performed. Because if you look at last 10 years time, before pandemic, the equity market was always in the bull run. It was always going up over a long period. Now in that scenario, the comparison is not good, because equity is not only going up. Equity is always goes ups and downs and ups and downs. In 20 years time, equity market across the globe has seen many ups and downs. Like in year 2000, I remember when I started my career in year 2000, there was a dot-com bubble. If you were working at that time, you recall the dot-com companies were valued very high, and then the bubble burst and the equity market went down. Then in 2001, there was a tragic event in September in the US, and therefore the market went down. And then again, market went up, and then in 2008, market went down because of the global financial turmoil, and then market went up. So all ups and downs has happened in 20 years, and that's the reason why we have compared this. This is the right representation in our understanding of how equity market behaves. So we have seen equity market of India over 10 years time, and 11% in 20 years time. In comparison to all other markets of 3% growth, India has seen 7.5% to 6.5%, depending on the market. That's and number one. Gold and silver gives the same rate of return across the globe wherever you invest. Plus minus, whether you invest in India, whether you invest in US, whether you invest in Middle East countries. So that's the reason why we have compared this. This is the right representation in our understanding of how equity market behaves. So that's a therefore you can invest anywhere. Now the third asset class is real estate. Real estate is very, very different. uh, Real estate actually depends upon where do you invest. There is no index to compare the Canadian market or Indian market. It depends on the city where you invest. It depends on the place you invest, the kind of asset which you invest in, land or house or apartment, and different kind of things. So we cannot compare real estate. It depends on where you invest in. Number four asset class which we spoke about is a guaranteed investment. Now, I'm sure you will agree with me. In current situation, the interest rates across the globe has gone down drastically. Now, interest rates today in the US is very, very low now. In during this pandemic time, interest rates in US is now gone up to, from 0 point almost 0.1% to almost 1.1% different. Different kind of bonds are available like that. In the UK also, maybe 0.1% to 0.70, that's the highest rate of interest. In UAE, Australia, Singapore, most of the countries, the rate of interest has gone down. and in India also, in the rate of interest has come down. However, the still the differential is very, very high. In current situation, India gives you around 6% rate of return in comparison to many other markets. So therefore, lot of individuals have started investing in Indian guaranteed products wherever they believe that some part of the money should be invested in guaranteed products, because in current times and most of the times we see equity is volatile. Can we invest all the money in equity where it is volatile? As a prudent investor, that's not good. If your retirement is today or was 4 months earlier, let's say in April 2020, it would have been very, very difficult times to be for you. I'm sure if in the US 401k is available for retirement, and at that time if you invested in that and you would have withdrawn money out of it, the value would have gone down by 40%. So some part of the money should always be invested in guaranteed products, and that's the reason a lot of individuals abroad are now investing money in Indian guaranteed products. So these are the four asset classes which I wanted to explain. Now we come to the third part of the webinar, which talks about the products in which the kind of products in which a lot of individuals are investing. And I would like to share a story for you to, for help us understand how this product works and why do we do this, why do we invest in these products. This story is called as My Third Child. Now, this third child story is, I'm sure you would have some time or other you would have heard this, but even then it's my it's my request that please listen to this story. If you haven't, it could be useful for you also. So this story is of called as My Third Child, and here is the story of Mr. and Mrs. Ram. If anyone whose name is Ram is just a coincidence, this is just just a coincidence that this name is similar. So Mr. and Mrs. Ram had two children, and there was a complete family. Now they work very hard and spend most of their earnings on their children education. And I'm sure a lot of you will say, I in my country, children education is free. The state provides it. I do understand that. However, we do spend a lot of money on extracurricular activities, like swimming classes, guitar classes, soccer classes. So many things which we spend on, and therefore this couple also spend a lot of money on children education and upbringing. So here, Mr. and Mrs. Ram meet an advisor, and the advisor asks few questions to this couple. He says, "Don't you think, Mr. Ram, it is time for you that you also start saving money for your retirement?" I'm sure your answer would be, "I want to save. However, the cost of education and the cost of upbringing our children is so very high that we are left with very little to save." The second question is very, very important. You can ask this question to yourself. If you are not planning for your retirement now, Mr. Ram, would you be okay to ask your children for your household expenses once you retire? I'm sure your answer would be, how can I? I'm 100% sure I won't be comfortable asking for it. The question continues, Mr. Ram, if you had one more child, would you have given the child also the same level of education which you are giving to your other two children? I'm sure your answer would be, surely yes, I will 100% I will do that. So, Mr. Ram, how much money you spend on your annual fees, and this includes all your upbringing cost, and this is not a cost; it's the investment on our children. That's our responsibility. How much money do we spend on the two children? And this is a representation that can be different for different people. This couple says that we spend around 500,000 rupees, let's say 10,000 Canadian dollars in a year on our school fees and other extracurricular activities on our children. Maybe $7,000 US dollars. So different countries, different currencies, and all those. The very, very important point which the advisor says, Mr. Ram, now I'm asking you to adopt one child. This child, and you have to fund this third child also with the same level of fees you pay for your other two children. Mr. Ram, this third child has only one responsibility. I don't know about your other two children. However, Mr. Ram, this third child has only one responsibility. That is to take care of you and Mrs. Ram in your presence and in your absence as well. And I repeat myself, Mr. Ram, this third child has only one responsibility, is to take care of you and Mrs. Ram in your presence and in your absence as well. And this third child is your retirement solution. Treat your retirement solution as your child, as if you are spending money on your child, same way you spend money on your retirement. A lot of you would have been doing it in your many retirement solutions, but I think year on year the money which we spend, increase of money which we spend on our children, same is the case in your retirement solution. So yes, you should also increase money on the investment of your third child. Now, about which we give to our clients. A lot of people have a smart wealth plan, long-term income benefits.
Dinesh, I think there is again some network issue. Okay, I think there is some network issue at Dinesh's place. So if we can just wait for 1 minute and he'll join soon.
I'm so sorry, there was.
Dinesh, you're on mute.
My apologies. So sorry for the interruption. This is technical challenge. Arjuna, you are able to hear me?
Yes, Dinesh, loud and clear.
Sorry for the interruption. My apologies for the technical difficulty which we faced. So I will start back from the place where we stopped. Um we stopped at the solution which we were talking about, the smart wealth plan, long term income plan. And this was Mr. Agrim, who was supposed to pay for 10 years, and this was an example of guaranteed products. So we took an example of 10 years payment of 500,000 rupees every year, which is 50 lakh rupees. Now here, Mr. Agrim paid for 10 years, and he invested almost 50 lakh rupees. He has to wait one more year, and after the 12th year, and from the 12th year onwards, every year Mr. Agrim is going to get 4.73 lakhs every year for next 25 long years. And this amount of money is guaranteed and it is completely guaranteed irrespective of the change in the interest rate in the market, irrespective of change in the situation of the market. This money is completely guaranteed, and at the end of 26th year, the amount of money which he invested as a lump sum as a principal, 50 lakhs again will be paid back to him as a maturity claim. So he is going to invest for 10 years and he gets 25 long years income, and maturity complete money with refund as a which was paid as a principal value. So that's a product a lot of people looks and here you may say what's so different, because in most of the guaranteed products you invest today, you know what is the rate of return you get on that money which you invest today. But what about the next year investment? You don't know what is the rate of return you get on that. This product tells you today only on the first year itself that what is the money you are going to get every year from after 12th year onwards. So that's a difference. And in the first 11 years there is a life insurance coverage as well. You may say, why life insurance? I don't want, I have enough life insurance. I understand, but life insurance is important because in case of an unfortunate event of death, let's say in the second year, maybe third year, we give 11 times of this, which is 5 lakhs into 11, which is 55 lakh rupees, which is almost equivalent to the principal which Mr. Agrawal was supposed to pay. We will pay them this money to the family so that they look after themselves. And money is not just for retirement for Mr. Agrim, it is also retirement for his wife. So therefore, it's a complete solution for our customers because it gives a guaranteed income for 25 long years. I don't see any product, maybe in different countries, which gives a guaranteed income of such a long period of time. Uh, Now I would like to take this opportunity to share the second product which a lot of individuals invest in, and this is also with a small story of a person who retired at the age of 50 20 years before in year 2000. And in 20 years before, at the age of 50 he would have retired. At this time he would have got a very good amount of value during his work life, and he invested 1 crore rupees in a fixed deposit or a bond or a product like that. Now in India, if he would have invested in year 2000, which is at the time of retirement of his, the rate of return of deposits was around 12%. He would have got 12% rate of return. Now deposits, I'm sure all of you agree with me, are for 1 year, maybe 1.5 years, maybe 2 years, sometimes 3 years, some many times 5 years. Maximum tenure of a deposit is around 10 years. Now therefore, after 10 years, he let's say this person takes for 10 years. After 10 years, this bond has to be renewed, and when it becomes renewed, the rate of interest can change. The applicable rate of interest will be there on that deposit in year 2010. So this product is very important, very good, because it gives guaranteed safety of money, guaranteed returns. But the challenge is the rate of interest changes as soon as the product or the bond is renewed. So in year 2010, this bond would have given now 10%. Now, if this bond would have been renewed once again in year 2020, 10 years later, current situation, the rate of interest is very, very low. Any country for that matter. And current situation in India is around 5.7, 5.5 to 6%, different banks, different kind of products available. Again, this product will be, or this bond would be again renewed after 10 more years, which is 2030. I don't know what's the interest rate. I can't predict future, but you can look at the trend. The trend line clearly showcase the interest rate is coming down. I don't know whether it will be 2%, 2.5%, maybe 3% or 3.5%, but the rate of interest trend line is clearly going down. So the summary is fixed deposit and bond returns are decreasing year on year. The situation is not different in any country. In year 2000 in the US, the rate of interest of a bond or a bank deposit was around 5%. And in current situation, it is less than 1%. In many other countries, the rate of interest used to be very high 20 years back, and currently it is going down. So therefore, the situation remains same. The rate amount of return, it will be different in different countries. However, the cost of or the cost of living or the inflation is on increasing order. If you look at, and we have just represented this as cost of thali, Indian thali, you would have made in your home or you would have gone out to eat that thali. This is just an representation purpose for expense. Thali 2000 in year 2000 in India used to cost around 20 rupees. In year 2010, same thali cost 50 rupees, and in the current situation, this thali costs around 150 rupees. 10 years from now, looks like it is going to cost dear, which is around 300 rupees. The summary is cost of living is increasing year by year. So overall, if you look at it, the rate of return from a deposit or a bond product, they are very good products. They give guaranteed returns. They're safe, secured. However, the returns are constantly on decreasing order. The expenses are also on increasing order. So if we only rely on deposit for our retirement, there will be some challenges, and I would like to share that. Life post retirement. I am not retired yet. I don't know how retired life looks like and what are the challenges. But when we meet a lot of people who are retired and they share their experiences, and based on their experiences, we have understood that post retirement life requires to maintain lifestyle. We always want to maintain our lifestyle, and which requires money, and therefore we need to have income, fulfill our dreams, which we are not able to do when the time we were working, going on vacation, going on places to meet, pilgrimage, and many other things which we want to do in our life post retirement. We also have to protect our health. Some of you may say we have a health insurance. That's okay, absolutely fine. But there are co-pays available. There are many expenses over and above the health insurance, so which we need to manage. Uh, Many people say we want to leave legacy to our next generation, which is also very important. Now, for all these reasons, for all these needs, we require a guaranteed fixed income, which must be guaranteed for lifetime, which is very important for us, because if the interest rate keeps on decreasing, all these expenses are increasing, and then we will not be able to meet those goals which we want to be, and life up post retirement. There is a product which we have, and a lot of individuals from abroad and high net worth individuals of India, they invest in this product. This is product name is guaranteed lifetime income plan. As a name suggests, this product has gives you guaranteed income. Number two, it gives you lifetime income, lifelong payouts. And third, you can plan your retirement early. You can leave legacy to your next generation. It can also help you in joint life annuity program, and it is complete flexibility. Let me share with you an example how this product works. This product, this is a very simple case study. This is an example of Mr. Sangwan. Again, if there is a resemblance among any of you or any of you known Mr. Sangwan, this is just a coincidence. We have just taken an example. He is age 50 and he's employed or he's working somewhere. Now, during his lifetime, he would have, or his working life, he would have earned a lot of money and he would have saved some money, and therefore he has a lump sum value he wants to invest in a retirement product. And let's say he has got one crore rupees of money for his retired life. He's age 50, he wants to take money at the time of retirement from age 60. So he invested a lump sum value of 1 crore, and when he was age 50, when he turns age 60, this product is going to give them or give him 11 lakh 27,000. Someone is no more. And at that time, if his spouse is also there, if his spouse is living, she has to maintain her dignity. She has to also look at her income for her responsibilities and her living. So therefore, we understand this challenge and we will give the same amount of income to her, 11 lakh 27,100 rupees every year till she lives. There is no change in the interest rate, irrespective of change in the market interest rates. So this way, she will also be able to take care of her retired life. And by the way, let me tell you, with a little research work, we understood, and this just also, you can see in our society, females live longer. If you look at your society and old age people, you will find many females than males, because genetically they live longer, and therefore they also require a lot of money for their livelihood. You can look at how much rate of interest we are giving on this product. You can easily calculate, very simple. But this is the kind of product a lot of people give. Now this 11 lakh 27,000 will be given to her till she lives. The day when she is no more, then whatever Mr. Sangwan invested, which is 1 crore rupees, we will give this money along with 5% as a as a legacy value, which means 1 crore 5 lakh rupees will be given to their child as a legacy amount, which means this is a complete product for your own life, for your spouse life, and for your next generation as well. Now, who invest in this product? And like I would like to share this: people who are in the age bracket between 45 to maybe 60, 65, 70 years of age, they do invest in this product because they look at guaranteed income for their life. That's number one. Number two, there are a lot of individuals who want to retire back in India. They also invest in this product. Number three, people who are not all going to retire in India, but if their parents are living in India, let's say the parents are living in India and we send a lot of money to them every year, that's a good thing. However, the better thing is that you invest here and they get money every year till they live. And the money which be given to the child can be given back to you in your own country, in your own currency if you want us to do. So these are the three kind of or three situations people invest in this kind of product. Let me quickly go to another product which is also very, very important, and this is the last product which we will talk about in today's webinar. There are multiple other products as well, but this is the product I want to share. These are the most important milestones in our life. Majority of our people, you and me, like children higher education, children marriage, retirement. Some people say child will take loan. I understand, but some seed capital we want to give, maybe some gift during child their marriage, and some good amount of money at the time of retirement. As I mentioned in the last product, the retirement product is for those people who have uh, you know lump sum value to invest in. But there are many people who do not have lump sum value. They want to just save money and they want to earn some interest out of this and a guaranteed product. So we have a product called Smart Wealth Plan, as I mentioned in the first webinar. The first product of this webinar, another product which gives lump sum. The first product which we told, you invest over a period of time and you get 25 long years income. This product gives you a lump sum value, because sometimes we require money for child education just for a purpose of buying a house or whatever reasons why we are investing in. So here's an example which is a product called Smart Wealth Plan, and the person invests for 8 years. This is a representation. There are multiple combinations and permutations can happen in this. Maybe you can pay for 5 years, 8 years, 12 years, 10 years. All those permutation combinations are available. So here is the example of Mr. Ravi who want to invest for his children, for his child's higher education. After 16 years, his child is going to turn major, 18 years, and she will require a lot of money for her higher education. So he invests for 8 years and around 10 lakh rupees, 1 million rupees every year, which means 80 lakhs he invests overall. Now, we will give a guaranteed amount of money of 1 crore 60 lakhs, 67,600 rupees. This is the exact value we will tell. Now, what's so different in this product? If you go to any guaranteed product, if you invest anywhere like bank deposits, maybe bonds or product like those, the challenge with those products is those products are very good. Uh, those products are very good, but the challenge with those products is today when you go and invest, you know what is the rate of return on that investment you are going to get. So let's say I go to a bank and I say, okay, what is money I want to invest? Let's say 1 million rupees. I'll say, banker, how much return you are going to give me on deposits? He will say, sir, 6%. Fantastic, very good. But I'm going to save next year as well, in year 2021, in year 2022, 23, and so forth. What is the rate of return you are going to give on the investment which I am going to do in 2023? The banker will say, sir, whatever applicable rate at that time will be given to you. So when you come in 2023, let's say in month of September, we will tell you at that time what is the return we are giving. Now the point is, we all know the interest rate is on decreasing order. So therefore, I will have to invest more money for my goals if the interest rate comes down. This product actually takes care. So on the first year itself, the rate of interest is guaranteed, and this same rate of interest will be given on your second year, third year, fourth year, fifth, and so long period when you took this policy. how many years you took the policy or the investment, same rate of interest will be applicable on those investments as well. So let's say on first year we say we give you 6.02%. Same 6.02 will be applicable on second, third, fourth, fifth, sixth, and eighth year, and ninth year, and 10th year, whatever years, number of years you are investing in. That is the difference in this product. No product gives you this kind of rate of guarantee on your future investment as well, which this product gives you. All products gives you on current investment, not future investment. So that's a difference in this product and other products. So a lot of people look at this product as well. Now, there are multiple other products which we give to our clients. Equity-based products are also there. A lot of individuals invest in equity-based products. We have paucity of time, so I am not able to discuss those products. So there are other products for health insurance like cancer insurance, and there are different dividend-based products which are available with Max Life and many different other products. Uh, if you are looking at these kind of products, my recommendation to all of you is, and this just a suggestion, you can look at it. Please block your 40 to 45 minutes with the advisor who has invited you, the advisor will actually help you in understanding what is your requirement, what is your current situation, and what do you exactly require, and we can suggest you the right product. So my recommendation is, please take out time, 40 minutes. It will be worthwhile for you. In the time which you invest will be worthwhile for your understanding of how different products can help you in different goals of life. So that is about the products. Last one slide I will take on the customer service, which is very, very important for us. And specifically for non-residents. Uh, some of the unique benefits which we give to our non-resident clients, and non-resident including OCIs as well. So number one thing, people who are non-resident, they do not live in India, and therefore while investing they may not come to India. So we can give this insurance or this policy, or you can invest money while in your own country, or you are in India, either ways. So you don't have to necessarily to be in India to invest money in. Number two, very hassle-free documentation, very easy documentation, all by digital mode, all by email or WhatsApp. Number three, you can send money in your own currency. If you want to invest in US dollars, you can send money in US dollars, you can send in Canadian dollars, you can send money in British pound, euro, whichever currency you are investing in, you can send that. Or you can send money from your Indian account in Indian rupees as well. So the choice is yours. You can decide how you want to, and every year if you're investing, you can choose to change the ways of how you send the money. Fourth, and very, very important, the most important thing, which is for our, especially for OCIs and people who are non-resident, who are actually intending to not to come to India after their work life. So any investment you do in India, whichever bank or whichever property or investments you do in India, you have to have an Indian bank account while you redeem the money. So if you're investing money in Indian property or real estate, you have to have an Indian bank account where your money can be redeemed to. If you're investing money in stock or mutual fund or whichever money you're investing, if you have to have an Indian bank account. Now, there are many situations the Indian bank account gets dormant because of no transactions or less transactions. Maybe the children do not want to operate an Indian bank account. Many reasons could be there. So Max Life is the only company which gives you this benefit. If you send money in your own currency or your foreign currency, Max Life can give you the remittance back in your own country or whichever currency you want us to send in. So if you want, let's say you are sending in Canadian dollars, you want us to pay you in Indian rupees, we can do that. You want us to pay in Canadian dollars, we can send you in Canadian dollars. You want us to pay in British pound, we can send you that also, as per your choice. And this choice has to be done at the time, not today, not at the time of investment. This choice has to be done at the time of redemption, because the situation may change. Therefore, we understand this. Last point, which is very, very important, it could be a value addition of the time which you have invested with us. whatever thing which you buy from India, since you are a non-resident and I'm a resident of India, if I buy anything, Archana buys anything, or you buy anything, the seller will charge you goods and service tax. If you buy anything in your own country, also there could be VAT. In Middle East countries, there is a VAT, and other countries there is a sales tax, and many other taxes which you pay while buying. But when you are a non-resident of India and you are buying anything from India, you can ask the seller that I do not want to pay the goods and service tax. It is allowed by law. If you are saying, if you are spending money from your NRE account and you give a documentary evidence that you do not live in India, which is your address proof of abroad, then the seller can exempt you from paying the goods and service tax. The seller may do not also, it depends on the seller. We at Max Life, as I mentioned during my first part of the webinar, is the vision of the company to be the most admired life insurance company. We we give this benefit to our non-resident clients. If you send money from your NRE account or your FCNR account, or you send money in your own currency without converting to Indian rupees, then the goods and service tax on the life insurance policy, which is applicable to residents, it is not applicable to you. So that's another benefit which we give. Lastly, everything is digital. You want us to talk, you want us to get in touch with you by WhatsApp, maybe by email, by a customer portal. Everything, all digital assets we have for you to converse with Max Life. There's a dedicated email ID for all of you. It's nri@maxlifeinsurance.com. You can directly write to them. You have the old methodology of giving a call also, that is also available. And customer portal is available, where a unique one-time password will be given to you, ID password will be given to you, or you can send an email also. So either ways you want us to talk to you, we can do that. So that's a benefit which we give to our non-resident clients. So again, I request to you, please take out your time, 40 minutes, 45 minutes with the advisor who has invited you. Block your time and block his or her time, and we will be able to assist you with your unique solution which is applicable to your need. So thank you so much. Thank you for being there, and thank you for coming over. And we are ready for if you have any questions. So over to you, Archana. I appreciate everyone has taken out time. If anyone has a question, if they put the question in the chat, I will be able to answer that.
Yeah, sure, Dinesh. Thank you, Dinesh. So the first question is, Dinesh, please elaborate on exchange rate impact while redemption. So I think this is related with currency fluctuation. Uh, so we can take
I
USA as
understand.
an example. Yeah.
I understand. So yes, currency fluctuation will be applicable on the product. Um, so currency fluctuation will be applicable on this product, but we need to look at, and let me explain this in detail. Many clients of us are from US and many other countries, Canada and many countries for that matter. Many people ask this question about currency fluctuation, and after we explain them in detail, they most of them, they take decision to invest in. I have a slide for this, and I was expecting this question. This is a example of US dollar. There are many other currencies: euro, British pound, Canadian dollars, UAE dirham, Kuwaiti dinar, and many other currencies: Australian dollar, Singapore dollar, and New Zealand dollar. We have all the answers to all those questions, all those currencies as well. This is just a representation of one currency, how it impacts. Now, many people say, Indian rupee depreciates. Yes, definitely, Indian rupee depreciates. But the question is, even after depreciation, does it make sense? Does it make sense for us to invest in India? If it makes, then I think it is better. If it does not, then we don't have to. Just only about currency fluctuation, I think that is unbiased. Sorry, that is biased. I am giving an unbiased view of this, and this is a simple calculation. We have, I have used this with many clients. Actually, we understood this from many people who invest from US, the large value customers and people who are foreign institution investors. I had a privilege of talking to them multiple times, and they shared. I asked them, why do you invest money in India if the currency is fluctuating? At the end, you have to pay money in US dollar to your clients. Then why do you invest in India? They say, yeah, I understand. We understand that Indian rupee is depreciating, but after understanding the depreciation, does it make sense for us to get more returns out of India? If it yes, then we should invest. The point is, do we take currency fluctuation for 6 months period, 3 years, 5 years period, or longer period? That's a question to be asked. Now, the so I think there is a noise in between. Okay, so therefore we should look at longer tenure. Why should we look at longer tenure? You will be able to see the trend line. 1 year, 2 year, 5 years, 3 years will not give you a trend line. Because if you look at 1 year, in 2006 Indian rupee appreciated, 2009 Indian rupee appreciated, 2003 Indian rupee appreciated. In current times, you will say in January Indian rupee was 70 and today it is 73, 76. It went up to 76. So it depends on different situation. If you want to look at the real trend line, in 20 years you will find. 20 years before, a long period of time, 20 years before, in year 2000 May, the rupee was around, the dollar was around 43, 44, 45, that kind of range. And today it is 73. We have taken example of 76. Now, if you go to a CAGR calculator, starting from 43, ending at 76 in 20 years time, the depreciation is 2.8. Now, this is a point-to-point calculation. You invested all the money in 2000, you took out money all in 2020. But in life insurance, you do not invest in lump sum. You invest on a staggered way. Some money today, some money later on, some money afterwards, and like that. So you actually tend to average out that US dollar Indian rupee rate, and therefore the depreciation will reduce to, let's say, approximately 2.3. Now, if you are in the US and if you don't want the currency depreciation, you have an option to invest in US, in USD, or you invest in India by converting Indian rupee. So we have given example of comparison, the opportunity cost, which we say. In US guaranteed products, the rate of return which we get is maybe 0.01 to maybe 0.1% also. Some bonds give 1.19. The 30-year US Treasury bonds or US government security sovereign bond gives you 1.16% in current situation. So you can take example of that. On that you have, there is no depreciation. On that you have to pay the tax in the US. So in your hand you will get 0.07% to 0.70% depending on the product which you invest in. In India, again you get 6% minus the depreciation 2.3 minus the insurance tax in the US, which is India and US treaty, and according to Article 11 of that, you have to pay 10%. The federal tax is the base slab rate of 10%. You pay 0.3% of the balance value. So in your hand you get 3.4. So the difference is big, and that's the reason a lot of people invest in India, even after understanding there is a depreciation. Again, another point, very importantly, it's called as diversification. Why a lot of companies from the US are investing money in India? They have to take the money back in US dollar, because diversification is important. Can it's a simple principle of investment. All our eggs should not be in one basket. So some part of the money should be invested in India, which gives you a much better return. So that's the answer I have. We have many other examples of different other currencies. We can give you British pound, US dollar, Singapore dollar, dirham, euro, Australian dollar, New Zealand dollar, and many other currencies if you want us to do. Different currencies fluctuates differently. A British pound could be different, US dollar could be different, Singapore dollar could be different. So we have particular countries presentation. If you block time with your advisor, we can share that presentation. Ultimately, the decision is yours, but we would always try to help you with the little data and analysis. That's all from my side, Archana, for this question.
Thank you, Dinesh. If you could just throw a light on US taxation also in depth. What are the tax implications? Because US citizens are supposed to pay the global tax.
Exactly. So not only US citizens has to pay global tax in the US, Indian citizen having global income also have to pay global tax in India. So taxes are always like that. Wherever you are resident, wherever you are a tax resident, if you are a resident of India and you have global income, your global income is taxed in India. If you are a citizen of US and you are living in the US, your global income is taxable in the US. And the taxation does not change in many other different countries as well. Let me share with you a very important thing about US taxation. um, Let me share about taxation of India also, because when you are investing money in India, you have to deal in two countries tax laws. One, India; another, your country where you live. So life insurance proceeds from Indian life insurance company is completely tax exempted in India. So the product like Smart Wealth Plan and many other life insurance products in equity based products, the the taxation is completely zero in India. So you don't have to pay any tax. Number one. Now in your country, the taxation is different, and we have taxation understanding of many countries. Let me give an example of US. There is a treaty between Indian Income Tax Department, which is Central Board of Direct Taxes, and US IRS. According to that treaty, the treaty is called as Double Taxation Avoidance Agreement. Article 11 of the said treaty states that if a if a person living in one state and investing in another contracting state, the other state can only tax up to maximum 10%. That means the federal tax applicable to your insurance income in India, income, not all the money. Income means gains. Let's say you invested 50 lakhs, you got 80 lakhs, which means 30 lakhs minus the currency depreciation, because actually you'll be taxed at US dollar, not Indian rupee. So minus the currency depreciation, the number of US dollars you received extra over and above your investment, you will be paying 10% federal tax. Your state tax will be different, will be separate. The federal tax is 10%. In UK, it is separate. In Canada, it is different. In Australia, it is different. Every country has its own different taxation system. In Middle East, it will be very different. So we will share with you your own country tax law, and this is not just our understanding. We can share with you. You can also ask a CPA. We will also share with you US IRS website and many other countries income tax like UK HMRC websites. How does it taxed in the UK? And many other countries, Australia, also New Zealand, and whichever country you want us to share it. Over to you, Archana.
Thank you, Dinesh. Can you share it for Germany also, because people have asked
Okay,
specifically for
great. Okay.
Germany and
So yeah, exactly. So in Germany it is different. France is different. Netherlands is different. In Europe, all the countries tax the life insurance gains differently. In Germany, the maturity, the gains which you are getting, it will be taxable. However, only 50% of this income is taxable if you are withdrawing money after 12th year and at the time of withdrawal you are 62 years of age. If you are 62 years of age at the time of withdrawal and you withdraw after 12th policy year, then this only 50% of this gain will be taxable in your slab. Otherwise, all the gains will be added to your income. That's how Germany tax laws is. Over to you, Archana.
yeah, thank you, Dinesh. Dinesh, if you could put, throw a light on African countries in today's situation, can they buy, or, what are the tax implications? Is it beneficial for them also to invest in India?
Surely, I understand that many of our clients from Africa, from Nigeria, Kenya, Uganda, and many other countries. Now, we all understand the countries are African, Western. Some countries we do not give life insurance coverage. Some countries we give life insurance coverage. So my recommendation to you is that if you are looking to invest money in India, definitely it is a good option. The reason is Indian stock market is good if you are investing in equity, and guaranteed returns are also very good products in comparison to the country where you live in. And but due to current pandemic situation, there could be chances that we may give you a restricted amount of insurance coverage. However, if you ask our advisor and block time, we can get your documents and we can underwrite this proposal, and we can tell you exactly before you pay the money, before you send the money, we can tell you exactly what is the status of your proposal. And this is the current situation of Africa. Over to you, Archana.
Yeah, thank you, Dinesh. One Austria tax implication.
Okay, so I have not presented in this presentation. We can get Austria tax law as well. We do understand that you want to understand this. You can see France, Germany, Netherlands, Ireland, Denmark, Sweden, Belgium, South Africa, Hong Kong, and many other countries we have mentioned. We will get back to you. Therefore, my request to you is please block the time with the advisor, and we can share with you exactly Austria's tax law on life insurance proceeds and the gains which you get from India.
So I think we have covered almost all the questions. There are certain, personal questions on my personal chat. So I would appreciate, and I would again suggest that to book a meeting with the person who has invited you, and so that, every person has a different financial goal and a different financial ability. To be able to understand, what kind of products and services could be of any use to you, we would like to know few details about you, who all are there in your family, what all financial tools you are currently using, what all financial goals are there. So for this, I would suggest you to have a personalized meeting. I am sure it is going to add value to your time. And then we'll be able to suggest you a personalized product according to your your country, according to your country's currency fluctuation and the tax laws. So that's it from our side. So thank you so much for joining. Thank you.
I also want to add one more point. I'd like to add one more point, Archana. I think it is important for us to clarify this. You are able to hear me, right? Yeah.
Yes, yes.
So one very, very important point is that can a OCI invest money in India with us? Because a lot of people say that my child is born in Canada, my child is born in Austria or countries in other countries, and therefore they are having that country's passport. So yes, answer is yes. OCIs, I'm sure you know better than me. Or if you're OCI, you do not have to come and take visa to come to India, except during this pandemic situation when Indian governments has restricted it. But OCIs do not have to take visa. Same is the case. OCIs can do everything. OCI is a kind of a citizenship, exactly not citizenship, but kind of citizenship, almost equivalent to a citizenship of India. What I can do, you can also do. However, except for two things, you cannot. I can buy anything. I can do everything in India. OCI can do also same thing, except for two things. Number one, he or she cannot vote in general elections of India. Second, he or she cannot buy a new agricultural land in India. Except for these two things, everything else can be done. So therefore, if you are OCI, or if your child is a OCI, or if your great grandchild is a OCI, or your grandchild is a OCI, that does not impact. As I mentioned, he does not have to come to India. Number two, he does not have to have a bank account of India. Even if you don't have, you send us in money in your currency and we can send you back in your own currency without involving Indian bank at all. So it is allowed by law, and we also allow to our clients who are OCIs. So that was a clarification I wanted to give. Thank you so much. I appreciate you have taken out time during this weekend, during this time you from your family time. Really thank you for attending this webinar. And thank you everyone once again. Na- and namaskar.
Thank you.